All right. Hello, everybody. Welcome to Moving to Myrtle Beach. This is our first live show, so bear with us if we're working out some kinks. If the audio is not good, let us know. We're having some issues with our microphones. I'm going to give it a couple seconds to see if any other people join on before we hop into things. But if you've been to the channel before, welcome. If you're new, my name is Nick. And on this channel, we talk about things to do here in Myrtle Beach. We have tips and advice about the area. I'm a real estate agent, so of course we talk about the real estate. If that's something that you're interested in, if you're thinking about relocating to the area, then hit the subscribe button down below. I post videos every single week. If you're interested in moving to the area, have any questions, feel free to reach out. I talk to people just like you every single day. There'll be a link down in the description where you can reach out and schedule a call with me. So it looks like we got a couple people on live. Again, this is our first live show. We're planning to do this once a month to start off. If it goes well, we'll do more videos. We're going to have a topic that we talk about every single week. This week, we're just going to be giving you a little bit of an update as we're heading into the spring market about how things are doing here in the Myrtle Beach market. I got a couple people with me, as you can see. I'll introduce them, or they'll introduce themselves here in a couple of seconds. But real quick, this is Rob. He is a mortgage lender here in the area. And then we have Ray, who is an insurance agent in the area. Again, I'll let them introduce themselves in a second. But again, if you're new here, my name's Nick. This channel is about Myrtle Beach real estate. Today, we're going to be giving you an update about what's going on in the Myrtle Beach market. Rob, go ahead and give them a little intro about yourself.
Hey guys, I'm Rob Ferraro. I'm a local mortgage lender here with Fairway Mortgage Corporation. I'm excited to be here. Thanks for having me, Nick. And we're excited to kind of get into things. Mortgage has been a hot topic here lately, so we're going to talk about some of the trending rates, things that we're seeing in the mortgage industry, factors that kind of make up where we are and where we're headed. And I'm excited to get into it.
All right, Ray, tell them a little bit about yourself, what you do here in Myrtle Beach.
Hey, everybody. I'm ray.finocchio. I own Goosehead here in Myrtle Beach. I've been in the industry for 18 years, so I've seen the ups and downs of this insurance market. And right now we're in one of the hardest markets we've seen since I've been doing this. So I'm here to tell you a little bit about what's going on with the insurance, why it's happening, how it's happening, and how to prepare going forward in 2024 if you are looking at buying a home or just looking to shop your homeowners and your auto. I could tell you some tips, some tricks, get you guys up to speed on what's going on.
Cool. And again, this is a live show, so we can see your comments. So if you have any questions, definitely let us know. If you're watching this replay, obviously we won't be able to see your questions live. But again, you can reach out to any one of us. All of our info will be down in the description if you'd like to reach out. I see there's a few people watching live right now. So let me know in the comments if you can hear us okay. Let us know where you're tuning in from. We'd love to see that. And we'll go ahead and start with a little bit of a market update. Okay, so you guys should be able to see the graph up on the screen here. So again, this is just going to be a quick update with what is going on here in the Myrtle Beach market. This is a graph of median home prices that have sold in the area for the past 3 years. And as you can see, prices have kind of leveled off a little bit. We had this huge run up, obviously, in 2022. And we all know that happened. That kind of happened across the country. Myrtle Beach saw that as well. And you can see prices have kind of leveled off since about June of 2022. There is a little bit of a fluctuation, obviously, as we get through different times of the year, right? Things slow down a little bit in the winter, but overall have remained relatively level. There's no signs right now of any significant drop-offs or increases happening. So we're expecting things to remain a little bit level here moving forward. In January and February of this year, we did see a big shoot up in inventory. That's a good thing. We've had a lack of inventory in our market and actually across the entire country for the past couple of years now. So seeing more homes coming to the market, that's always a good thing. As you can see, every December we see a huge drop off. That's totally normal. We saw a drop off this year as well, but not to as low as numbers as in 2022. And you can see the homes that came to the market in January and February were a little bit higher than the previous years. The number of homes for sale have been slowly increasing. Again, this is a good thing. We've had a severe lack of inventory across the market the last couple of years. So we've been slowly on the rise since about April of 2023, so almost a year now of homes increasing. We have about 5,600 homes on the market as of February of this year. And this
Is that considered low inventory right now?
Yeah, so inventory is still a little bit low. It's obviously better than it has been. We'll actually get into the month supply of inventory here in a second, and we can look at those numbers. So inventory is actually still relatively low when we look at what a balanced market is, but obviously that's getting better. Actually, that's the next thing that we will get into is months supply. As you can see, as of February 2024, there's about 4.1 months supply of inventory on the market. 6 months is what's considered like a normal, healthy, balanced market. Typically, anything under 6 months is going to be considered a seller's market. Anything over 6 months is going to be considered a buyer's market. Back in mid 2022, we were down to like 1 month supply of inventory. And basically what month supply is, it takes into account how fast homes are selling and what's on the market. So if no new homes came to the market today, it would take 4.1 months for us to completely sell out of homes. And every graph that we've been looking at right now, this is for all property types. So condos, townhomes, manufactured homes, single family homes, all across all price points across our entire MLS, so the entire market. As you get into like single family homes, we can see we actually only have 3.5 months supply of inventory. And then if we look at homes that are priced from like 270 to 380, we can see 3.3 months supply. So really, as you kind of start to narrow things down, what your specific criteria might look like, the numbers could get better or worse depending on your specific situation.
So it sounds like condos are way up as far as inventory.
Yeah, so if we look at like homes for sale and we look at the condo townhome market, you can see definitely a steeper increase, right? And also if we look at month supply, we're at almost 5 months supply.
Gotcha.
So a big portion of that inventory that's been coming on the market is condos. And I'm sure we'll get into that a little bit when we talk about like the interest rates and financing and also insurance,
Right.
why that might be a factor. So the last point that I wanted to touch on was just days on market. So again, back in mid to early 2022, we got down to like very low days on market, 56 days. The thing to consider is this is including your escrow period, right? So if it takes 30 days to close a home, that means on average, like homes were going under contract within 30 days. And we know in 2022, a lot of homes would come to the market and they go under contract immediately. We're getting up to like 100 days on the market on average for, again, this is all property types. If we look at just single family homes, we're at 114 days on the market. If we bump this out to the last 10 years, you can see 100 days is probably about average aside from the last 2 years,
Right.
2022, 2021. So again, that's a pretty healthy market. Again, if you consider the escrow period being about 30, 45 days in our market, that means you're getting your home under contract in about 2 months. That's pretty normal to see. And if we look at pending sales, actually, this is the last thing I wanted to touch on. Pending sales for January and February are up. Again, every December, we see a drop off throughout the holidays. You can see January of last year versus January of this year is about even. Same thing with February. So homes are still going under contract. Homes are pending. Again, we're heading into the spring market. So we're going to see that all start to continue. So that's pretty much what I have for the market update as far as the housing market goes. I know Rob wants to talk about interest rates a little bit. I know you can't talk too much on specifics, right? Because everybody's situation is going to be different. Everybody's debt to income ratio is going to be a little bit different. Their credit score is going to be a little bit different. Right. But on average, like, what are you seeing right now with interest rates?
You're exactly right. That's going to change from scenario to scenario. And two of the biggest factors would be credit score and the reason for your purchase, right? Like primary residence versus second home. So if you were doing a 30-year fixed rate mortgage and you're looking for a primary residence, single family home, kind of best case scenario with, top tier credit, we saw the interest rate market dip just below 7% for those individuals here just yesterday when the Feds met. And that is promising. We still haven't seen exactly kind of what we're waiting for as far as the Feds and their meetings go. Back in December, they came out and said that, they were expecting 3 or so rate cuts throughout this year, and that they were going to start doing so as they watched inflation. And once inflation got to the point where they deemed it was manageable, then we would start cutting rates. So they've met 3 times so far this year, and each time we've kind of been waiting for them to have that conversation. Okay, inflation is at this point. We haven't seen that yet. So, that's not the best news. But the good news is the conversation is, when are we cutting rates? As you guys know, last year, it was just increase. So, it sounds like as they get inflation under control, then we're going to start to see rates follow and come down. But it was promising to see rates dip below 7% again here. And hopefully they kind of stick and we start to head in this direction.
Okay. Is there any talks of rates going up at all?
Not at this point, but it's really all about inflation. That's going to be the biggest factor. If that doesn't get under control, I'm sure at some point, the conversation is going to flip from when are we cutting rates to, starting to hike rates again. So right now the conversation is still promising, but the future will tell, right? They've kind of come out each time and said they're holding steady. They've said this since January. Each time they meet, it seems like inflation so far is getting a little bit worse and a little bit worse. But we hope to see that kind of come back, especially as we approach the elections. You guys know how that goes. A lot of the times inflation is one of those things that they try to focus on, right? So hopefully the next time we meet, the conversation starts to go the other way. Inflation starts to get under control.
Cool. Before we get into what you got to talk about, or did you have a question?
Yeah, I got a question as a prospective buyer. If the rates do go down, do you guys see a buying frenzy here? What do you think that does to the pricing of the homes? I guess it's kind of for both of you.
Yeah, I'll let Nick talk more about the pricing of homes, but certainly the activity will pick up. I feel it already. At the end of last year, when the Feds came out and said they're going to start changing that conversation to see when we were cutting rates, the interest rate market already started to kind of follow, and rates started to decrease at the end of last year. And immediately, it was like an alert went off, and everybody, buyers started coming back to the table. And that was just a very small, it didn't actually change rates that much, right? So if we see rates get down into the low 6s or high 5s, I certainly see a market shift and buyers really hustling to the table.
Yeah. I talked to a lot of buyers who are considering moving pretty much every single day, at least 1 or 2 new people, right? And that's a question that I get asked all the time. And, I don't think the rates today are slowing down a lot. Well, it is slowing down a lot of people. I don't think it's slowing down all people. But certainly if rates go down, we're definitely going to see more demand in the market. And as you can see, like inventory is going up, but it's still not high, right? So it's only going to take, a few rate drops before, we see that going in the wrong direction again. So yeah, that definitely is something to consider and think about. And I know a lot of the things in the news, right, are like rates getting down into the fives, and people automatically think, oh, 5%. No, I think rates getting down into the fives, I think 5 is a stretch, but like hopefully 5.99, right?
Right.
I do think if we see rates get down into the fives, I don't, or into that 5 flat mark, I don't think that's going to be this year, but I think if it is, like, we're going to see homes flying off the market just like we did in 2022.
Yeah. And just to piggyback off that, there will be a big market shift. And if you're a buyer who's waiting for rates to decrease, understand that there is going to be some sort of cause and effect there. People that have bought in the last few years, a lot, I'm sure you can attest to this, a lot of the times they can work out better deals, maybe seller concessions, get the equity position, the deal on the property that works for them. Even though they don't have the best interest rate, they'll be able to come back and refinance that. But if you wait for rates to come down, you may not be able to get the same deal on the purchase of the home.
Right. Cool.
Yeah.
Before we get into what you want to chat about, I see people hopping on the stream, hopping off the stream. We got a couple of people watching right now. Hello, Dominic. Thank you for commenting. Anybody who's watching, this is a live show right now. So if you have any questions, or if you just want to say, hey, let us know in the comments, we can see that. Dominic asked, he's going to be retiring in Myrtle Beach area, possibly even Conway, in about 3.5 years, and be looking at a home in the $400,000 price range, paying cash. That's awesome. I've seen different tax amounts. What would the approximate taxes be? Definitely a great question. Depending on where you live, right, that's going to fluctuate a little bit because each of our towns have different millage rates. Some of them you pay extra city taxes as well. But the average effective tax rate here in the Horry County area is about 0.42%. So you multiply that purchase price, $400,000, by 0.42%. You're going to be looking at about $1,600 or $1,700, depending on where you live. Again, that's the average tax rate, right? So that might be a little bit lower, it might be a little bit higher. Of course, in South Carolina, we also have the homestead exemption. So once you turn 65 and you've lived here for a year, you get a little bit more of a discount on that as well. So if anybody else has questions, feel free to drop them down in the comments below. We'll be happy to answer that. But I know Ray wants to talk a little bit about the insurance and what we see going on here in the market.
One thing I'll say about the taxes, I guarantee it's a lot less than what you're paying up north.
Yes, yes.
We hear that all the time.
Yeah, Dominic said he's in upstate New York. That's where I'm from as well, the Poughkeepsie area. If you're watching, let us know where you're tuning in from. We'd love to see that.
Yeah. And going into the insurance now, what you'll save on taxes, you'll be paying a little bit more on insurance down here, and that's just the price to pay to be on the coast. So right now, I'm sure you've heard we are in a hard insurance market. The last 2 years have probably been the hardest market I've seen in the last 20 years of doing this. What does a hard market actually mean? It means the carriers are actually doing their job. They're actually going to underwrite a risk appropriately. They're going to take a look at the age of the home. They're going to take a look at the HVAC unit, the hot water heater. They're going to look at everything and just see how good of a risk, what your chances of losses are for that particular home. Instead of doing a blanket, just, by zip code, this is the rate, they're individually underwriting these properties now. And it's something we haven't seen in a long time. As part of this hard market, we're seeing a lot of carriers change up what they're doing as far as deductibles, as far as their endorsements are going. 2 years ago, it wasn't that uncommon to have a flat wind deductible, $1,000 or $2,500. Now, those deductibles are gone. It's 2%, typically a minimum of 2% wind and hail. They're taking away some of your sewer backup coverages, your water losses, kind of what used to be a throw-in coverage, they're backing those out from the policy and charging for them. This hard market has caused over a dozen carriers to pull out of the state altogether, which means that your policy got non-renewed and that carrier is shut down for business in South Carolina. And I got some stats here of why we're in a hard market. I hear all the time, insurance is a scam. If I use it, my company's going to cancel me. That might be true, but insurance companies are a for-profit business. Nobody's going to work to lose money. And right now, the insurance industry is they're losing money like crazy. In 2023, the industry as a whole on personal lines, that's home, auto, boats, RVs, anything but commercial business insurance, the industry as a whole, the combined loss ratio was about 109%, which means every dollar in premium they took out, they're paying out $1.09 in claims. So these companies are getting just killed right now with claims. They're losing money like crazy. Of the top 6 carriers, only 2 had a loss ratio that was below 100%, and that was Geico and Progressive. Other carriers like State Farm, Allstate, USAA, they're just getting crushed. I believe State Farm had a combined loss ratio between 115 and 125 last year, depending on which quarter we're talking about. So that was 2022 and 2023. What are we seeing in 2024? We're not going to see as big of a rate increase as you saw the last couple of years. I would say 5-10% is what you could plan for. It's definitely not going to be a flat renewal for the most part. I would budget 10 to 15% rate increase across the board. That could be home, that could be auto, that could be toys, whatever you got insured. The trend is that the prices are still going upwards. I think by the end of the year we might actually level off and maybe start to trickle down a little bit. But with going back to these inflation numbers, claims are more expensive nowadays. A roof that cost $4,000 to replace in 2020 is now $12,000 in 2024. So unless that we get a grasp on the cost of the claims, the prices are pretty much here to stay. So
cool.
Right.
A lot of good info.
You talked about policies across the board. Are you saying that auto policies are rising more than home owners insurance policies, or vice versa? Or
they're both the same. They're both seeing double-digit rate increases. In 2023 and 2022, it wasn't uncommon to see anywhere from 20 to 50, even higher rate increases on auto and home.
Yeah,
so,
I remember.
COVID created a vehicle shortage and a part shortage. So these carriers that were having to deal with an auto claim, the car could be sitting at the shop for 6 months waiting on a part, and that insurance carrier has to pay storage fees, and those storage fees add up. So I've seen cars with minimal damage get totaled out just because the storage fees were too high. So that trend is slowly reversing. I don't think there's a supply shortage like there used to be, but it's still not what it was pre-COVID.
Right.
Gotcha. Dominic, we see your question here. We'll ask Ray in a second. I think a little bit goes into this because it's going to depend on the specific area of the home in order to get you an accurate estimate on what the cost of homeowners insurance is for a $400,000 home, but maybe you can give him a little bit of a range. But I see we have a bunch of other people jumping on that weren't on when we first started this. So I just want to repeat that, if you're new here, this channel here is about Myrtle Beach area. I talk about things to do here, tips and advice about the area. And I'm a real estate agent. So of course I talk about the real estate, post videos every single week about the area. We're doing these live shows. This is actually our first one to answer questions live, just to kind of connect with you and maybe answer any questions that you might have. We're going to be doing these once a month to start. It's going to be the third Thursday of every month around 6:30. I have Rob here. He is a mortgage lender in the area, and Ray is an insurance agent. So we just went over a little bit what's going on in the housing market. Rob talked about interest rates a little bit. Ray talked about the insurance. We're here to answer your questions about any of that stuff or anything else about Myrtle Beach in general. If you want to know what's kind of going on fun in the area, we can talk about that as well. Can you answer this question a little bit?
Yeah. So I see two questions here. What's the cost for homeowners on a $400,000 home and a $300,000 home? It's impossible to give you an exact cost, but the rule of thumb that I give my lender partners when they're kind of budgeting the debt to income, the number one most important factor in determining your homeowner's price is the age of the home. You can have a home that's brand new. The insurance will be a quarter of the price as if it was 20 years old. So a good rule of thumb, any home that's brand new to 5 years old, budget 0.5% of the replacement cost for insurance premium. So 0 to 5, 0.5%, 5 to 15, budget 1%, and anything over 15, budget 2%. And then I don't even want to get into the mobile homes because that's a whole nother issue. Mobile homes is over 3% of the price. So 0.5%, 1%, 2%, depending on the age.
Gotcha. So here, Maxwell asks, $300,000 home, brand new in Conway.
So you're probably $1,500 on the high side.
Cool.
Now we know, because we live here, that there's a big difference between insuring your home that's right along the coast, or as we call it, kind of like east of the intercoastal waterway that runs pretty close to our coast, versus homes that are out towards Conway or Aner or things like that. Is there kind of like a rule of thumb or any, like, can you kind of compare?
No, the main players in the insurance industry here, the top three carriers, that the distance to the coast is an insignificant part of the premium when it comes to the age of the home. So it's really all about the age of the home when it comes to dropping your price.
Interesting. Okay.
What about flood insurance? Kind of like general rule, what I tell people, right? Myrtle Beach, our entire area is technically all a flood zone, right? Yep. We're sea level. We do have storms that roll through here, but we have what's called the X zone, which is what many consider to be not a flood zone or a non-rated zone, right? And general rule is what I tell people when they ask me is, if you're not in a flood zone, you're not required to have flood insurance. Or if you're in that X zone, you're not required to have flood insurance. And if you wanted to get it for the peace of mind, you're probably looking at a couple $100s a year, depending on the size of your home and whatnot, right?
Yeah.
But if you're in the flood zones, the rated zones, that could be upwards of a couple $1,000s, depending on.
Yeah, it can be anywhere in a high hazard flood zone. It's anywhere from $2,000 to, I've seen them as high as $8,000, $9,000. It really just depends on if your home is in a flood zone, a hazardous zone. You got to get two things. You got to get an elevation certificate, which will tell us the base floor heights that we plug into the flood quote. And the higher the base floor elevation, obviously the lower the premium. If we don't have an elevation certificate, we got to rate the home as if it was just sitting on the ground. So a lot of these raised beach houses, if the previous owner bought them in cash, they might not have a flood policy because they didn't want to pay for one and they had no lender to tell them that they needed one. So if you need to pay for an elevation certificate, it's $400 or $500, but it's worth it in the savings over the life of the home. If you're saving a couple $1,000s a year, I'll pay $400 or $500 for an elevation certificate all day long. And then always ask the seller if they have a flood policy in place, because they might have been in that home for years and they might have grandfathered rates. And if the seller has grandfathered rates and you can get a copy of their policy, we can transfer those rates to the new buyer. I just recently did one home in Georgetown the home was built in the 50s, so they've had 50 years of continuous flood coverage. The rated flood premium was over $4,000, but the actual premium that the owner was paying went down to about $350.
Wow.
It was grandfathered that far into the past.
And same coverage and everything.
Yep, same coverage.
Wow,
Yep.
that's amazing.
Wow.
Yep. Yeah. So if you can get it from the seller, it'll transfer to the new owner.
Cool. Well, we're getting about 30 minutes into this live show. We do have this scheduled for about an hour, but we can go over if you guys have more questions. Definitely feel free to ask us questions in the comments, because I know we had our certain notes about what we want to talk about, and we're hoping to ask or answer some questions for you guys. It doesn't necessarily have to be about insurance or interest rates or the housing market today. Happy to answer any questions that you have about Myrtle Beach in general. I do have a question for Rob, though, in regards to, and this actually might be for both of you. I have a lot of people that reach out to me regarding condos, and the condo market today is a little bit weird when it comes to both interest rates, getting financing, as well as insurance. I don't even want to talk about like the oceanfront condo tell styles, because that's a completely different beast. But just like your general middle of the lane condo that somebody might live in full time, what are we seeing with that today?
With interest rates?
Yeah.
Getting
financing.
Yeah. All right. So the interest rates on condos right now, again, going back to determining if you're going to live, if this is going to be a primary residence for you, or if it's going to be a second home or investment property. Mortgage investors right now are really scrutinizing second home condos and investment condos for a number of reasons.
Okay.
So they really want to see 25% down on condos in order to get like fair pricing. They're putting premiums in place and making you pay for an interest rate if you put anything less than that down. So there's a few factors. I don't know if you guys remember, I think it was 2020 or maybe even 2019. No, it was 2020. There was a complex in Florida, Surfside, Florida, that just basically crumbled. Mm-hmm. And because of that and a couple other situations like that, investors really scrutinize the structure of the condo and the soundability. So we see guidelines coming into the market and have been here for a while, where when you're purchasing a condo, the investors are very concerned about like repairs that haven't been addressed and making sure that they're insured up to the adequate amount. So we have seen more condos that fall outside of conventional guidelines, and that's due to being underinsured and having repairs that are needed that have not been addressed yet.
Now, the actual master insurance policy for the association itself, you guys scrutinize that as well, right? They can't have too big of a deductible, right, or else they can't get approved for a loan. Mm-hmm. What are those guidelines as far as like the deductible for the wind?
They just want to see that if something takes place and the roof needs to be replaced, that the insurance company is covering the full amount of the roof needed, right? When it comes to deductibles, they just want to see that they're not so high, because that results in special assessments. Mm-hmm. So if you are purchasing a condo and you run into a situation where there's a special assessment, after you purchase, and now all the owners are required to pay an extra, $1,000 a quarter to repair the roof or what have you, that's something that $1,000 is now an expense of the property. And if we were looking at that as they were purchasing, that could blow what we call their debt to income ratios, meaning their income doesn't support the overhead plus that $1,000. So that's where you see the scrutiny on the deductible side.
So there's no standard, if they have a 10% wind deductible, you cannot lend to them.
Right.
Anything, there's nothing like that. No.
You can make cases because there's a lot of factors involved, right? Kind of depends on the complex, but typically if you're higher than 2%, that's going to be an issue.
Okay.
We got a couple of questions up here on the screen. Mr. Jason Lynch, do you have any shops just like New York? What kind of shops are we talking about? I'll be happy to answer that question with a little bit more information. So let us know. I'm going to hop to Maxwell's comment here. What is the current interest rate on a USDA loan? And here you can put money down on the loan to get lower interest rate. Is that true? Why don't you let them know real quick what a USDA loan is?
A USDA loan is a loan designated for rural areas. About half the Horry County would be considered to lie in a USDA area. So just to make it like fairly, if you know our area, it's kind of west of the intercoastal, with the exception of Carolina Forest, is going to qualify for that USDA financing. And the benefit there is the benefit of the USDA loan is you can put 0% down as a down payment. As it comes to putting money down to lower the interest rate, I'm sure what you're referring to, I guess let me start here. If you put significantly more money down, like let's say the minimum's 0%, but you decide you want to put 15% down, that may be enough to get an interest rate reduction. But what you may be referring to is what we call buying down interest rate points. And yes, you could lower your interest rate by paying points, which would be 1% of your loan amount, to reduce the interest that you're signing up for. So virtually when you buy, when you go for a mortgage and you're buying a home, you have the ability to pay more in closing costs for a lower interest rate, or you can pay the minimum closing costs and take what we call the par interest rate, or whatever the investor is offering you for free. So yes, you can spend money to buy down points to lower your interest rate.
Good info. I want to get back to the condos a little bit. Kind of a hot topic of conversation of late is, HOA dues increasing, assessments for insurance. And I understand that's because insurance is kind of going up across the board. That includes the condos, right? The associations have a master policy to cover the buildings, the roof, the property, things like that. In a lot of cases, it's gone up pretty significantly. It seems like more so than for like a single family home. Can you talk on that a little bit?
A lot of the condos here in Myrtle Beach, they're older. They're built in the 80s, early 90s. Excuse me. And the Lloyd's of London markets, they do not like old buildings. So I've seen triple. Sorry.
You're right.
You all right?
Yeah. So
you need to call the nurse in.
He might need to get a drink of water here. The joys of a live show. He'll be back to answer that question. But what he's getting into is, in some cases, insurance like tripling for condos. And, some condos, they do include that insurance fee in their HOA dues, which means the HOA dues have gone up. I never like to see that. A lot of condos will also, even though you still pay the insurance through the HOA, that's going to be a separate assessment. They might bill you like 3 or 4 months out of the year when the insurance renews. I always like to see that because that's going to then fluctuate depending on, if the insurance went up or if it went down, right? Because the assessment is going to be based off what that came in at. Whenever you see HOA dues go up, even if it's for insurance, that can get a little bit scary because they might not ever go back down. I guess in regards to those differences, how does that affect being able to get financing? Is it better to see it one way or another?
Not necessarily. I would agree with you. It's better to see it kind of paid as an assessment because that's more of a temporary thing and that'll adjust. As far as the number, when it comes to special assessments when you're financing, the fact that there's special assessments doesn't disqualify the property from financing. We just need to see that the buyer can support those special assessments with their income.
Gotcha.
So whether it's paid outside of the HOA dues or within the HOA dues, if it's the same number, it's not going to matter to us.
Okay.
One thing I'd like to note, though, is as far as insurance for condos, a lot of people don't realize that there are two different types of insurance that you're paying.
Right.
One of them is the insurance that we've been talking about here is the master insurance policy that covers the entire complex.
Right.
And typically the HOA or the homeowners all chip in to pay their small portion to make up that total premium.
Right.
That is the master insurance policy that is paid within HOA dues and covers the outside of the building.
Okay.
When you're financing, it's going to be required that you have what's called an HO6 policy or a walls in policy. If you're not financing, you should still look into this because they're very cheap and will cover everything inside your walls. So this is the policy that we would have paid within the escrows when you're making your payments. Again, called an HO6 policy, covers the inside of the unit. And those are typically pretty reasonable. I see them about $1,000 a year,
Okay.
typically.
You all right?
For HO6,
Yeah.
man,
Would you agree?
HO6, it all depends on how much coverage you need on the inside. So the HO6, you got to start by talking about the master policy first. Did you guys already talk about this?
Yeah.
Okay.
Yeah.
Did you talk about all-in coverage?
No.
Okay, so a master policy is going to rebuild the unit to the specs of the when the builder turned it over to the first unit owners. So if you had Formica countertops, you get Formica countertops. Any upgrades to the unit, if you take out the plastic shower insert and you put a tile shower in, if you go quartz countertops, that kind of stuff you want to insure on your HO6 because the master policy won't cover that. The condo programs, especially on the ocean, it's kind of a cookie cutter type of deal. So it starts off at $25,000 in coverage and then goes all the way up to $200,000, and the premium goes anywhere from $750 up to a couple $1,000s. And the reason why it gets that expensive is because the condos, they do a blanket rate. They cover the condos plus part of the building, which would be your upgrades. So it's a little bit more than a homeowner's policy.
Cool. We're getting towards the last 15 or 20 minutes of this live show. If you missed the beginning of this, if you're tuning in now, we've gone over a little bit about like a market update, what's going on in the housing market. We've gone over interest rates. We've talked a bunch about insurance. This will remain a video on this YouTube channel. So if you want to go back and watch the beginning, definitely feel free to do that. If you have any questions now, go ahead and drop them in the comments. We'll be happy to answer. We've already answered a bunch. Mr. Jason Lynch, going back to the shops like New York, we still don't know what kind of shops you're talking about. I'm just going to assume you mean maybe like delis or pizza shops. You see a lot of those up in New York. It's definitely a little bit different here in South Carolina. That was a shock for me. I'm personally from New York, but that's slowly starting to change as more people move down here from that area. We're starting to see more delis pop up, more pizza shops pop up. One of my favorites that just opened up in the Market Common area in October, I think, is DeViglio's. They're actually from Long Island themselves. They used to have a little Italian market up there, and now they're doing that down here. So one of our favorite places to go and grab fresh Italian food, hot foods. They do sandwiches and things like that. So we're starting to see more things like that pop up. If you guys have any questions about the topics we've been talking about, we'll be happy to answer those. Again, we're going to be doing these live shows once a month. We're going to discuss different topics for the first 20 to 30 minutes or so, then hopefully answer some questions and talk about some fun topics.
I see Dominic talking about being with Liberty Mutual for 35 years, and they jacked his price up. Unfortunately, when there's a hard market, loyalty means nothing to these carriers. So you could be with them 30 years, 50 years. I've seen people be with a carrier for 20 years. They have one auto claim and they get dropped just like that. So the carrier's number one objective right now is to get back to being profitable. So if they don't see you as profitable anymore, then you're gone.
The harsh reality of 24.
Yep. You guys do anything fun recently? I know you live up in North Myrtle Beach. They have the big St. Patty's Day parade that just went by.
Oh yeah, always a blast. Always a blast.
Yeah.
That's what I love about that North Myrtle Beach area. It doesn't matter what holiday is going on. They have some sort of huge parade. They do the big Christmas light show. It's a real community, which is cool to see because it's not that it's spread out, but it's right at the beach, right? So like everybody brings their golf carts down to Main Street. It's like a big spread out neighborhood almost.
Yeah. Our office always gets in the parade, and they have floats, and they're handing out candy and toys and everything to the kids. I've never been a part of it, but it looks awesome.
It is.
Should definitely do that one year. Conway too is starting to get pretty festive. They're always decorating for every holiday. Halloween's been huge for a couple of years, but now I know they did some stuff for St. Patty's Day and Valentine's Day, so that's always fun to see.
Conway's the hidden gem. They got so many good restaurants like Rivertown Bistro.
Yeah.
Hoppin' Witch. That place is really coming along.
Yeah,
it is. They're really working on that riverfront too. It's beautiful down there.
Yeah. Have you guys been to the new Pop Stroke yet?
Oh, I'm taking my son there tomorrow, actually.
Very cool.
So we're excited to check it out. It looks awesome.
Yeah, I've not been. It looks fun. I heard it's a little bit expensive. So
I imagine it would be.
It's probably not going to be like a once a month type of thing, but maybe once or twice a year. Friends or family visiting or whatever. Probably a lot like Topgolf. That's expensive too, but it's fun to go to every now and again.
And unlike most places down here, they don't offer a local discount. So when you buy a property down here, go get your license switched over as soon as you can. And so many restaurants, shops, they offer local discounts to us. So
you got to get used to asking for that, especially in the summer, right? A lot of times in the winter months, places will lower their rates a little bit for the locals, though we're not having as big of an off season anymore as we used to, right? There's just more and more people down here all year round. But in the summer, a lot of people are visiting. You might see some increases on your bill. It's always good to start asking for a locals discount because you never know. Not every shop does, but some of them do.
Yep,
absolutely.
Yeah. So it's not just your insurance that you get a break on when you're actually living here full time. So it's always good to ask. And you want to change that stuff over as soon as you can. Did we talk about like the difference in insurance if it's a second home versus a primary residence? Is that a big factor?
It's a factor. It might increase the premium 20-25% if it's a secondary home. It's important to distinguish a secondary home versus a rental property. A lot of people will call a home a secondary home, but they got the home listed on Airbnb, and it's only their second home when it's not rented out. So if it's truly a second home, it's probably 20% more than regular homeowners. And that's strictly because of no one's there to notice if a claim's going on. So if you got a hole in the roof, no one's there to notice. So the claims get a little more expensive just because you're not there to stop it right at the beginning.
Right.
There is that big difference in your tax bill if it's your primary versus
the general rule is if it's a second home or an investment property, there's no difference in that rate, right? Those are going to be the same. But those versus your primary, the general rule is it's going to be about 3 times the amount. In some cases, it's even a little bit more, 3 times plus add a couple $100. So it's a significant difference if it's not your primary residence. Dominic is going to be down here the first 2 weeks of June and can't wait. You plan to do anything fun, Dominic? Or are you just hanging out, relaxing? Let us know. You guys have anything else you want to touch on today?
If any of you guys own a good pizza shop up there in New York, we could use a good New York style pizza shop.
I know you and we tried to go to River Oaks. I've heard great things about that place. We tried to go for lunch. They open at 3:00. I've not been. Have you?
I haven't been able to get down there.
You live right over there.
I literally wrote the homeowner's insurance for those people today, so I will be visiting there more often.
You live right down the road, so that can be that can be your main place, right?
Yep. My favorite thing to do, in all honesty, is ride the golf cart around the neighborhood, just anywhere. I mean, moving down here and getting a golf cart, that's like a way of life.
Yeah, it really is.
Especially if you have kids, grandkids. It is such a big time waster. The highlight of our Friday nights is driving the golf cart. I probably shouldn't say this on YouTube, but it's a little over 4 miles, which is against the law, to the gas station.
Yeah.
But we cut through neighborhoods, so we're not on a main road. But I mean, it kills 2 hours, and you know the kids love it. So
we do the same thing. Like I said, being down in North Myrtle Beach, we have the park, the beach, Main Street, all the ice cream shops. We can go out to eat all right there on the golf cart. And everybody's doing the same thing. So it's
I live in Market Common. I don't have a golf cart, but that is such a golf cart friendly area. You can drive down to all the shops and restaurants. You can get to the beach. And Ray kind of alluded to it. The law is you can take it about 4 miles from your home or from the entrance of your community. On roads that are 35 miles per hour or less. I did a video talking about that a little bit more in depth. I think it was like 7 weird facts to know before you live here. So definitely check that one out. But yeah, golf cart life is huge down here.
And these things are pimped out.
Oh yeah.
My golf cart has Apple CarPlay. It's got LED lights. You know, it's got subwoofers. I mean, it's pretty. These things are like cars.
It's crazy to see where golf carts have gone here in the last 3 years, 4 years.
James will be down here April 6th. I'm meeting up with him and his wife. Got him down on our calendar. I'm excited to meet you, James.
Awesome.
Yeah, show you guys around a little bit. Anything else you guys wanted to touch on? We're about 51 minutes in. Again, if you're watching and you have any questions, let us know. We're getting ready to wrap this up. So
or if there's anything you want us to answer next time that we need to go back and do a little bit of research on, throw it in the comment section, and we'll be glad to answer anything you guys have.
Yep, we're going to be doing these live shows again once a month to start off. It's going to be the third Thursday of every month at 6:30. Plan will be to have a topic that we talk about for 15, 20 minutes. We got into it for about 30, 40 minutes today, but we're having a good discussion. And then hopefully we can answer some questions that you guys might have. So cool. Anything else?
We're good.
Well, I would say the Grand Strand's a very diverse area that's made up of a lot of different little towns. So, you know, if you're looking to make your way here and you'd like to live in our area, do a little bit of research about, you know, the different areas we have up and down the Grand Strand from Little River to Murrells Inlet, and which each little town offers.
Dominic said he'll have to trade in HD for a cart.
You might be driving the cart more in that. Is that a Corvette in that thumbnail picture?
Yeah, looks like it. Cool. Well, I don't see any other questions rolling in. If you're watching this after the live show, because this will be up on the channel, or if you just didn't have time to ask your question, feel free to reach out. I'm going to put Ray's and Rob's contact info down in the description below. For me, as always, I'll have a link down in the description where you can schedule a call at your earliest convenience for a time that works for you. That's going to be www.contactmovingtomb.com. I'll be happy to hop on a call with you, answer any questions that you have. I'm sure these guys will be happy to answer any questions that you might have as well. Thank you guys for tuning in, and we will see you next time.
All right, guys. Thank you.